Okay, welcome to Community CPA's Saturday webinar. So I'm substituting in today, just at one time. So hopefully, well, even if you're disappointed, it's only going to be one time. So anyway, so welcome you again. So we're going to get today's webinar started, and let me share the screen. All right, today's webinar, we're going to talk about tips as a payroll service. So I guess everything about tips. So that means both from an employee side point of view and also from an employer point of view. So what do we what are the responsibilities of both the employee and employer? And as I mentioned in the beginning, so normally our Saturday speaker is Ying Sa, and she's the CEO of our firm and also the chief CPA. And of course, she's a well-known CPA and well-known figures in the community. So, and then again, so in case you are wanting to listen to her presentations and you have to wait until next week, so I'm just doing a substitution one time today. All right, and okay, so the webinar, we usually post them onto our website as well as in our YouTube channel. So you can go to our website, communitycpa.com, to look for the most recent postings as well as announcements for future webinars, for example, within the coming week. And also you can go to our YouTube channel to look for the past postings. Okay, and we are a regional CPA firm with 3 branches, 2 in Iowa, state of Iowa, 1 in Minnesota, and we provide tax, accounting, audit, and other business services for both individuals and also businesses. All right, so we, of course, this is a free service to the attendees, and we are not taking responsibilities. So we do the best and research we can, and to give you the most up-to-date information. But until you become our client, we are not responsible for whatever your action, relying on the information in this webinar alone. So as I mentioned in the beginning, so the topic for today is the tips. Okay, so let's first look at what is defined or considered to be a tip by the tax bureaus, by both IRS and the state authorities. So tips must be discretionary. So in other words, you can, if you're an employer, you cannot, or you're an employee. So basically, if you are part of the business, you cannot dictate how much the customer must pay. So otherwise, that's not called a tips. Okay, that's not called a tip. And so tips are discretionary by the customer. So basically, at the customer's discretion, they decide how much to pay, as well as who to pay, which employees get the tips. And there are many industries that involve tip payments or with tip the employees, such as restaurants, hotels, taxi services. So that, of course, taxis include Ubers and Lyft, such as that kind of thing. And also, the payment of tips can be in a number of different forms. The traditional one, of course, is the old-fashioned way, is the cash tips. So you, when you're done with the service, you leave some cash, cold hard cash, as the tips to whoever that's providing the service directly. And the other way is on credit card, which actually is becoming more and more common. A lot of people don't even carry cash anymore. So when you go to a restaurant or you write a Uber, so you just get your service, and then when you're paying with the credit card, and so you just add additional amount as tips to the person providing the service. Also, the IRS and the state revenue department, they consider gifts that like a non-cash tips such as the tickets and passes that you give to the person providing service, as your appreciation for their service. So instead of giving them a cash, so you just decide giving them a ticket. Like, for instance, you have a ticket you don't want to use, and you skip, and they happen to be interested in using that, whether it's a sports ticket or a theater ticket, and things like that. So you just give them a ticket. So that's a non-cash, but that's still considered tips. And then whatever the value of that ticket or pass is, so that will be the amount of the tip in that non-cash tip situation. Also in a lot of restaurants, the tips are pooled. And so all the servers, they put their tips in one bucket, and then at the end of the day, so they divide the tips up among the servers, and sometimes servers even divide some of that up to the other other employees in the restaurant, such as the chefs or bussers and chefs. Okay, and also the tipped employees, they may come up with some other tip sharing arrangement. So and then whatever, so the tips you receive through those tip sharing arrangements. So they are also that's also a method of receiving the tips by the employees. Okay, so the most important question, of course, is are tips taxable? So all cash and non-cash tips, okay, such as the passes and tickets, okay, received by an employee are considered income by that employee, and they are subject to income taxes. So that's both at the federal and the state level, typically. And all cash tips received by an employee in any calendar month, or in any pay period, rather, okay? So all cash tips received by an employee are subject to Social Security and Medicare taxes and must be reported timely through the employer, except, okay, so there's only one very narrow situation, so which almost very rarely happens in my experience. Okay, so that is if an employee receive a cash tip of less than $20 in a calendar month, so then that employee is not required to report that tip. Okay, so then the employer would not need to calculate any Social Security, Medicare taxes on that. Okay, but that does not mean there will be no income tax. Okay, so if you go back to the first sentence, all cash and non-cash tips received by an employee are income, and they are subject to income taxes. That would include, let's say you got $18 tips in a month, and so that would include that $18. That will be your income, so that would be counted as income. Just you don't need to report that to your employer, and then you will not be charged by the employer for Social Security and Medicare, and you will, during the regular period. Okay, so you just settle that at the year end on your tax return. Okay, so now let's go into a little details. By dividing up the two aspects, okay, so one is from the employee side and the other one is from the employer side. Okay, so let's first look at from the employee side. If you're a server, and then if you're a tipped employee, such as a server in a restaurant, so then what are your responsibilities? Okay, so you, because you are required to report your tip income, so you do need to keep a record of it. Okay, so then of course you are receiving tips daily, so you should keep a daily tip record. And so IRS has a form for that, which I'll mention in a little bit. Okay, so you should, but you don't have to use that particular form, and so you can use your own way to keep a date and make a daily record of the tip received. And you also need to report tips to the employer. Basically, typically you should report tips to your employer by pay period. So the employer can include your tip income on the paycheck, so that the employer can calculate your Social Security, Medicare to be withheld, as well as your income tax to be withheld, as well as employer's portion of the Social Security and Medicare. So the employer needs to accurately reported tip amount in order for the employer to do the accounting to do the payroll accounting correctly. All right, and also all of your tips are income. So whether you report to employer or not, they all need to be reported on your income tax. And of course, the portion that you already report to the employer, they will show up on your W-2. So the your total income on W-2 would include the tip amount, or should include at least if the employer did the calculation correctly. Okay, should include the reported tips amount already. And then if you have any tips that's not reported to the employer, and so that would, of course, would not be on your W-2, but then you are still supposed to report those on your income, personal or individual income tax return. So there is actually a specific form for that purpose. Okay, so as I mentioned earlier, so you do need to keep your own record. If you're an employee, you need to keep your own record of the tips you received on a daily basis. And so IRS has a form 4070A for that purpose. You can use that form, 4070A. And of course, as I mentioned earlier, you don't have to use that form. You can use your own format to keep a daily record of the tips. And also, you do need to keep a record of non-cash tips if the client gave you like tickets and things like that. So then you just have to convert that into a dollar amount. So if the tickets are being for such as, for example, a theater ticket, maybe for $12, and that's the market price, and then you just need to record a $12 ticket as your tip. All right. Also, you should not include service charges that the restaurant automatically include on the bill. For many restaurants, they automatically charge 18% or whatever percentage of the restaurant charges. Okay, for a party of 6 or more, and some restaurants even charge for that for 4 people or more. Although not so too common. I think very common is for 6 or more. For a party of 6 or more, the restaurant automatically add a gratuity charge onto the bill. And so that if you received a portion, you as an employee, okay? So if you're the server and the restaurant, at the end of the day, they give you some money from that gratuity. So that's actually not considered tip, okay? So that's from the employer. So that is a mandatory, so that's not a tip. Okay, tip is a discretionary. Remember earlier I mentioned the definition. So a service charge like that is actually the restaurant's income, and your portion. If the restaurant decides to give a portion of that to you as a server, and that actually will be added to your wage. So it's almost like a bonus. So you basically get some additional pay, but that's not tips. You don't have to report that. Okay, so here's the Form 4070A. that I mentioned earlier that helps you to keep a daily record of tips. Okay, and then of course if you're working throughout the year, so you're going to need repeat the same form many times because you're going to have more than 300 days in a year, so each form only have several lines. All right, and so as I mentioned earlier, so if you are only getting like $20 in a calendar month, the total tips you receive in the month is $20 or less, so then you do not need to report that to the employer. But if the amount you received, the tip amount you received is more than $20, and you do need to report that to the employer. And again, so the report that you submit to the employer, there's no particular format you have to follow. But that written the slip or statement should include your name, address, social security number, and your signature, and the particular pay period that the report covers, and the total the amount of tips you received during that pay period. Okay, so and then you can use that form 4070A to help you to do that calculation. So and then you can use that to there's a 4070A to keep track of the daily, and then use 4770 and to as your report to report to employer. Okay. And also, you do need to report the tips timely. And so, in most cases, for example, if the restaurant is paying its employee wages bi-weekly, and you should submit your report bi-weekly. But if the restaurant is paying you monthly, then you should you should report your tips no later than the 10th of the following month. Okay, let's say for the current month you receive tips, and then you have 10 days to submit your report when the month is ended. All right, so this is the form 4070. So remember, there's a form 4070A that helps you to keep the daily record of the tips you received, and for form 4070, you use this form to report to the employer. Okay, and again, you don't have to use this form as long as you have all the information included. So you can just write on a piece of paper and with all the information required. Okay, so then, but of course, IRS did have this convenient form that you can use. Okay, so that's so far. I talked about how you keep your tip record and report to employer, and also at the end of the year. So you, as an employee, you also will need to file your individual income tax return. So you need to report your wages as well as the tips you received on your tax return. Okay, and of course, those tips that you already report to employer, they will show up on your W-2. So, and then there's a line on your per individual tax return to enter the income from W-2. So you don't have to worry about the tips you already reported to your employer, because then all you need is just the W-2. But if you have tips that you did not report to your employer, for many reasons, you could even be you simply forgot to report that to your employer, or maybe you're receiving only $18 a month, and so then you got at the end of the year you got a couple $100 of those tips that you didn't report to your employer. Okay, so then you should use a form 4137 to report that and do a Social Security and Medicare calculation using that form, and that will be part of your individual tax return. And also, I guess the last item here, so I mentioned here, but really that's a more of an employer's responsibility. And in fact, I will leave that out from here, okay? Yeah, so that you don't get confused. So you can ignore the last item about the allocated tips for now, because that's an item for employer. Okay, and then this is the Form 4137 that help you to report tips on your personal tax return. I mean, for the portion of tips that you did not report to your employer. Okay, so this is for unreported tip income. All right, so much for employees' responsibilities in handling or in reporting the tips. And so now what about the employer? Let's look at the employer's responsibilities. Okay, so employers are required to retain employee submitted tip reports. I remember if you're an employee, you receive tips, and then in many cases, the employer don't even see the tips. And you know, such as cash tips, you just directly put in your pocket if you're a server. Okay. And so the employer don't have any record of how much you got, you know, as cash tips. You actually report that to the employer, and then employer need to retain the employee tip report that employee submitted to employer for a number of years. Okay, so you don't have to report. In most cases, I guess probably in all cases you don't have to retain them forever, but you do have to retain them for a number of years. That's required by law. Okay, and also employers, if you're an employer, you're also required to allocate tip shortfalls. And what that means is, for example, if you're paying a tipped employee an amount below the minimum wage, okay, which is allowed for tipped employees. So federally, I believe that amount is you can pay a tipped employee as little as $2.15 an hour. But of course, many states set a higher limit. As you know, for example, in Iowa, that amount is $4.35 an hour for a tipped employee. But if at the end of the pay period, if that employee, the tipped employee, did not receive a minimum wage, so that based on the hours worked and the total minimum wage as well as the tips, reported tips, if they don't add up, if you do that and divide by number of hours, and it turned out the server's average wage is below the minimum wage, you as an employer need to make up that difference. Okay, and the state actually may have a higher limit on, may have a higher minimum wage, so then you need to make up even more if your state has a minimum wage that's higher than the federal minimum wage. And also, if you're in a restaurant with more than 10 employees, and if the total tips that the employees reported, the tipped employees reported, are less than 8% of the gross receipts. Okay, so in other words, the average tips that the servers receive are less than 8%. In that case, you actually have to make up the difference. Okay, so you as an employer, you need to make up that difference so that the tipped employee will receive at least 8%. Okay, so again, in many cases, these don't happen, but I just mentioned these actually are the requirement by law. Employer is also required to withhold taxes based on not only the wages that you were paying, so if it's a tipped employee, and if you're paying maybe a wage of $4.35 an hour, if you're an Iowa employer, and you also need to withhold taxes based on the tips reported. Okay, so basically the wages plus the tip, the income reported, and so that's how you calculate. You as an employer calculate the withholding taxes for that employee. And of course, an employer also needs to file quarterly wage report. That's the FICA quarterly return, 941 quarterly return, and pay the taxes. So you actually, when I say pay taxes, employer is paying a portion of the Social Security and Medicare, and then there's also an equal amount that's being withheld from the employee. Okay, so you need to remit all of that to IRS on a quarterly basis. Okay, and also the tips reported by employees, and you need to do your accounting correctly. So make sure that the tips reported are included, on their pay stubs and are included on the year-end tax form W-2. And at the end of the year, so the employer also needs to make another report to IRS. That's a FUTA or Form 940 tax return. That's the federal unemployment insurance return, and then the employer needs to pay that taxes. Okay. All right. So if an employee did not report a certain amount of the tips that he or she received, and as I mentioned earlier, so there is a form for the employee to report such tips to IRS when the person files individual tax return, year-end individual tax return, and the employer is not liable to withhold and pay the employee, well, actually, I would say pay employee share of, because you didn't withhold, because the employee did not report that tax. You don't even know how much you should withhold for the unreported portion of tips. Okay, and then so you're not liable for not withholding and not paying the employee share of Social Security and Medicare for the unreported tips. Okay. And you may still be found liable for the employer portion or employer share of the Social Security and Medicare, but you don't pay that until you receive a notice. If somehow the employee reported later, such as through individual tax return, and IRS determined so then employer is also liable for a certain amount of Social Security and Medicare taxes, and so then you just pay them when you receive such notice or demand from the IRS. All right, so a few more words about the service charges that I talked about earlier. So remember that service charges are, these are also called gratuities. So they're often called gratuities. And if you go to a restaurant, you go to a party or six or more, for example. Okay, so the service charges, they are, I think I mentioned earlier, so they actually are treated as wages if the employer decided to distribute a portion of the service charge to the servers. For example, maybe distribute 15% of the 18% service charge to the server, maybe the other 3% to either other employees or cover the expenses, whatever the employer does with that. So any portion that's distributed to the employees, and they actually are more like bonuses, okay? That's on top of the basic wage that you're receiving, and they are not tips, so the employee don't have to report that. And also, they actually are income. The service charges are considered income to the employer. And so the employer needs to include that as the service charge in their the gross receipts when the employer files tax return. Okay, and also you very often see that on the restaurant bill, the there are some suggested tip amounts. For example, if it's a 15%, some amount, 18%, some other amount, and 20%, some other amount. So restaurants or employers are allowed to print such information on the bill, but those amounts that's printed on there are not considered service charges. Okay, so only the actual amount paid by the client or by the customer will be the service charges. So whatever suggested amount there, and it's just a suggestion to make the customer's calculation easy, because you already did the calculation for them for whatever percentage, and so they can make it easy for the customer. But they are not service charges until the client actually pays an amount, whatever the amount that client pays. Right. All right. I think that ends today's topic, and so we discussed tips from both the employee and employer sides. And so, if you have further questions, you can email us at Catherine@communitycpa.com, or call us at our general number 515-288-3188. So we're open 6 days a week from Monday through Saturday, 8:30 a.m. to 5:30 p.m. And also you can also email our other staff, at their individual emails. So you can go to our website, communitycpa.com, to find our other employees or other staff's individual email and phone numbers. Okay, so let me stop sharing the image, and I think there's no questions. All right, so thank you all for listening again, or for attending today's webinar again. So, and we will see you next week. Bye-bye.